Alrighty, welcome everybody. Over the last couple of weeks, we've gotten a lot of new viewers, a lot of new subscribers, and I want to catch everybody up and share what the channel is all about. So if you're new, in this channel, I talk about building passive income or cash flow through dividend growth investing. And I'm really addressing or talking to newer or beginner investors, investors that are looking or interested in investing in dividends. And I share my journey here on YouTube, and I'm very transparent. I share my portfolio here, and I share exactly what I'm doing through M1 Finance. If you're not familiar with M1 Finance, it's a commission-free brokerage account similar to Robinhood that you can invest in or invest with. And that's what I'm doing. So if you're new to the channel and you're interested in this is what I talk about every single week. And I know that there's a lot of other content creators or YouTubers out there that have maybe a similar approach or they talk about investing. In this channel, it's me sharing my journey and something that I'm very passionate about and what's been working, what's not been working. So today, I want to talk about dividend growth investing. And there's three things that I want to talk about. I want to talk about, first off, what is dividend growth investing? Second, why I chose dividend growth investing as my investing strategy. And then lastly, how I use M1 Finance to invest in dividend growth stocks and ETFs. So first off, dividend growth investing, what it is, it's companies, wonderful businesses that are well managed, that are growing their dividend and paying it out to their shareholders year over year. This is a pure example of a dividend growth company, Johnson & Johnson. I personally am a shareholder of Johnson & Johnson, and the reason why I am is because Johnson & Johnson, once again, it's a well-managed company that is continually growing their business and also rewarding their shareholders in the form of a growing dividend. Now, this is a prime example of a dividend growth company. An example of a company that is not a dividend growth company, a company that I personally do not invest in, is a company like General Electric, where they have at one time paid a dividend, but for whatever reason, due to outside factors and their business model, they are unable to sustain that growth. And they've therefore been forced to cut their dividend. So this is an example for me of a company that would not fall under the category of a dividend growth company. So a company that is perpetually increasing their dividend year over year, this is what is known as a dividend growth company. Now, a lot of you have probably already heard of Warren Buffett. Warren Buffett, CEO of Berkshire, has just shy of 50 stocks, and 2/3 of them pay a dividend. Warren Buffett is a dividend growth investor. And this type of investing style, it's all about building cash flow. Whether you're investing in real estate or you're starting your own business, you're looking to build cash flow. And this is how I view, and I would assume that Warren Buffett would agree with me, this is the concept of dividend growth investing. You're building cash flow. There's two typical types of investing strategies. It's when you purchase a stock or company at $10 and you hope that the price will go up to $15, a nice 50% gain. And the first concept would be, okay, I'm going to purchase a stock at $10 and you're going to sell it. You're going to speculate that it will go up in value to $15 and then you'll sell it for a 15% gain. That is looking at it from a capital gain standpoint. A dividend growth investing standpoint would be, okay, I'm going to look at a company that is at a fair value, maybe $10 in this scenario, and regardless if the stock goes up or down, in most cases, you're going to hold on to it. And you're going to invest in this vehicle for passive income, for continual payouts in dividend year over year. And this dividend should be growing. Right? It should be growing year over year, so you're getting a pay increase every single year. And regardless if this company, this $10 company, goes up to $15 or $7, you're going to hold on to it because it's an investment and it's generating passive income for you. Right? That is how I view dividend growth investing. And this is why I have chosen to invest in a dividend chosen to take the investing approach or strategy of dividend growth investing. Now, looking at the S&P 500 yield over the last 100 years, currently, so the mean has been around 4%. So historically, the S&P 500 has yielded about a 4% dividend yield. Currently, we're just shy of 2%. Now, something that's ever being more, where investors really have to look out for is inflation. With the U.S. continually printing money, our currency, it's continually losing value because of inflation. And the U.S. inflation rate has averaged right around a little over 2%. Right now, we're currently under 2%. So if you were to just invest into the S&P 500, you would currently have a slightly higher yield than inflation. So you would be at a gain. You would be winning in that sense. You're not at a loss. Now, what I'm looking at is what is the dividend growth? The dividend growth of the S&P 500 over the last, almost 30 years has been between 6 and 7%. Currently, the dividend growth rate is just under 10%. Now, this number is really important. 10% is what the S&P 500 is growing at currently, at the moment. Now, the example that I used earlier with Johnson & Johnson, Johnson & Johnson is growing over the last 10 years right around 7%. So very in line with the S&P 500. But there are other opportunities out there. And this is why I've chosen to invest in a dividend growth investing strategy, because there's other great, wonderful businesses out there that you can invest in that you can actually get a higher rate. Now, this is historical data. Historical returns are no guarantee of future returns. But I believe this is something, as a dividend growth investor, this is incredibly important. We want to look at, okay, how has the business performed over the last 10, 20 years? Have they continually raised or increased their dividend, particularly during the Great Recession? I think this was really a trial or a test for the U.S. economy and the global economy, actually, if they were able to withstand the hardest of times during, for example, the financial crisis. So this is why I've chosen to invest in a dividend growth investing strategy. It's all about cash flow. I'm investing into these wonderful businesses that are well managed, and I'm receiving dividends. I'm receiving cash flow. So I'm not looking to purchase something at $10 and then sell it at $15. No, I'm looking to buy and hold and then continually over time grow my passive income through investing in these wonderful businesses. It's very similar. I mean, if you were to look at investing in real estate, some people invest into real estate to quickly flip the home. Right? I think a lot of people are familiar with that concept. You purchase a fixer-upper home, you fix it up, and then you sell it a couple months later for a massive gain. That would be the example of purchasing a stock at $10 and then selling it at $15 for that capital gain. Another concept would be you're purchasing a rental property and you're holding it for 30 plus years. That is the concept that for passive income or cash flow. That is what I'm talking about here. Why I've chosen to invest in this strategy of dividend growth investing. All right, now what I want to do is I want to go back into M1 Finance. Now, M1 Finance is once again, it's a commission-free brokerage account. It's my preferred platform. I'm not going to post an affiliate link here or really go into that. I'm not affiliated with them. There is a referral here, but I don't want to talk about that in this video. I have chosen to work with M1 Finance for a couple of reasons. There's some fundamental benefits that come with it. I've shared other videos in the past on that. But really the value that I have with M1 Finance as a dividend growth investor is I can invest in fractional shares. If I want to invest into Microsoft or Visa, I don't have to buy whole shares. I can invest directly into these wonderful businesses and purchase fractional shares. So you can see here with Visa, for example, a company that is trading at $178, I can purchase fractional shares every single day, every single week. And I do that by dollar cost averaging. And I've shared another video. I'll link that here in the top right if you're interested in dollar cost averaging. So with fractional shares and the automated rebalancing of M1 Finance, it makes it incredibly easy for me to invest in this strategy. Now, I'm not talking about the manual rebalance, because if you do a manual rebalance, that'll trigger a taxable event. The way that it works with M1 Finance is you set your target allocation. And I have my target allocation because the way that the market is performing, I want to be a little bit more conservative. And I'm trying to, quote unquote, recession-proof my portfolio. And I've taken that approach and I've adjusted my target allocations accordingly. So if we were just at the beginning of a bull market or we just came out of a recession, I would then up the target of technology and these other maybe growth-oriented sectors. So this is what I've done. This is how I've set up my account. And once again, similar to the example that I used with either real estate or you purchase a stock at $10 and it doesn't matter the price, if it fluctuates, if it goes up and down. What I'm really interested in is the passive income. I'm interested in the cash flow. The cash flow, this is what I'm going to be using down the road to pay my bills, to pay for my living expenses. This is why I invest in the dividend growth investing strategy. It's not to get a quick win. It's so that I can continually, perpetually grow my income, my passive income, through dividend investing. And as we mentioned or we spoke about earlier, with the U.S. inflation rate, it's incredibly important that these companies are growing their dividends. This is the whole concept. If they're not growing their dividend, this concept does not work. And as a dividend growth investor, I'm looking for those hidden gems out there, those wonderful businesses that are continually growing their dividends. Okay? And with M1 Finance, I'm able to do that. So with M1 Finance, this is how I've managed this. I think it's a great alternative to other sources, other passive income sources, whether it be you're investing in rental income, you're creating your own business, you're creating your own website, you have your own side hustle. There's so many different ways, and the reason why I've chosen dividend growth investing is with my particular situation. I'm down here in Texas, I'm here in Austin, and I work in the technology sector. And in my sector, it's very cyclical. And if we were to be hit by another recession, and if I were forced to, due to factors that I'm unable to control, I have to be flexible, and I'm able to, get up and move across the country. Say I wanted to relocate to Seattle or to California, wherever my job takes me, I would be able to do that. With rental property, it's a little bit more difficult. So this is why I'm really focusing on growing my portfolio here, and so that I can, over the long term, build this second income, if you will. And this is the reason, one of the reasons why I've chosen dividend growth investing. Okay, another thing that I want to look at, and what I briefly mentioned on, was the concept of being a little bit more conservative with my target allocation. And that's what I've done here over the last couple of weeks here on M1 Finance, is I've adjusted my target allocation. I'm now have it heavier weighted in consumer staples and industrials. And also with another sector that I plan to grow out is my utility sector. Now, this is something that I continually, that I'm looking at. This is not more of a growth-oriented sector, but if we were to be hit by a recession, this is it's passive income. I mean, there are companies that are very stable. They perform very well during a recession, and this is part of the reason why I have them included in my portfolio. Now, if you've watched some of my other videos, I take a little bit of an unconventional approach in how I invest. Before, when I was just investing in TD Ameritrade, paying $7 per trade, it was just ridiculous, and investing with Robinhood, where I had to purchase full shares, it was a little bit difficult. I could only invest into around 40 holdings. With M1 Finance, with the fractional shares, I'm able to actually invest in a lot more holdings. And I've chosen to do so. Now, I don't recommend, and this is not advice by any means, this is just an approach that I have taken, that I am now more broadly diversified. And I'm really excited about it. I've mentioned in previous videos that this is more of an experiment. I don't have a track record that I can refer to and say, okay, I have around 100 stocks that I'm invested in fractional shares here on M1. I don't have the track record to say, okay, this is going to work. I've only been doing this since about the middle of May. And what I've done is every single week, I've transferred money every single week, every day actually, into my M1 account. And through the power of compounding interest, I believe that this is going to continue to grow. And my investing strategy, I'm not a super hyper growth oriented investor who's looking to buy and sell. I'm looking to buy and hold for the long term. Similar to the example that I used with Warren Buffett. Warren Buffett, he's a buy and hold forever type of investor. And that's the investing strategy that I have adopted in my own personal life. So this is how I invest into dividend growth investing, or how I have invested in this dividend growth investing strategy through M1 Finance. And to be honest, I couldn't be happier. It's a very seamless experience. I love this approach because the automation features that come with M1 Finance, I set up my account. I can set up my account to auto invest my transfers on a daily basis. I can actually show you how I personally have it set up. I have it set up where I'm investing every single day, Monday through Friday. And with M1 Finance, through the auto rebalancing based off of my target allocation, M1 Finance is automatically investing into my underweight holdings based off of my target allocation. Now, however, you can also set specific trades or purchases within M1 Finance. And this is something that I've done here this week. I can show you how I did it. Here on the 15th, I transferred $350 from my account, and I made manual purchases of the following companies. Here in $30 in Cardinal Health, in Nucor, International Paper, GPC, Ben Franklin Resources, Honeywell, and others. And so this is one way so for example, when the market takes a dive, I can go in and I can take advantage of that, and I can purchase these wonderful businesses at a discount. All right. So this is how I use M1 Finance. This is how I leverage the platform for my purposes as a dividend growth investor. And this is what's worked for me. Once again, I take a little bit of an unconventional approach, just right around 100 individual holdings. And I get asked all the time, well, how do I manage that? How do you read the 10Qs and the 10Ks of all these companies? And I'll be very frank and say that I don't. I don't listen on all the earning calls of all of these companies that I own. It's like the example that I've always loved Warren Buffett's example of when you purchase a farm, you don't go up and look at the crops and look at them every single day and see how they're doing. That's not my investing approach. I invest in these wonderful businesses. I've done my research, I've done my due diligence, and I let them grow. And I'll share another video in the future here how I analyze whether or not to cut or take out or decrease a position in my portfolio. I'm a buy and hold investor, and there's very few times that I would ever sell a stock. For example, if the company were to cut their dividend, I maybe wouldn't just sell it off immediately, but this is something that I would deem as a reason for why I would separate from an individual holding or sell it off. But other than that, I'm looking to invest into these companies and hold them for the long term. And this is what I talk about on this channel. And if this was helpful to you, I would invite you to subscribe, to like the video, and I will catch you in the next video. We'll talk to you then.